It's easy to get money.
Yeah.
It's not easy to know what to do with that money to actually make you more money. Asset accumulation. This is the really important, not always talked about area of opportunity. It is one of those things that once you start realizing that you can really make money and now have the ability to spend money, we really want to think about why is ownership such an unlock. The easiest ways to accumulate more wealth faster is, I'm going to call it asset ownership. Let's say that's taxed at 25%, so $25,000 essentially needs to either be written off or handed to Uncle Sam. Which would you choose?
Oh, I'm writing it off.
For sure.
Every time.
So that's your investment fund.
Yeah. It's like, well, if you can put that asset into something that feeds you or feeds your community, that's a win-win.
You were made to do more in life than just pay bills and get by. The key to even more success? Get your assets together. With generational growth, we're not just talking about wealth. This is about building your version of an incredible life in every area that truly matters: mind, body, business, and self-care. What if I told you there's a life-changing opportunity to help yourself, even now and especially now? I'm Hart, an expert on being both well and wealthy. I've spent decades building what's basically my own investment fund, emphasis on fun, acquiring and growing unique brands with capital, partnerships, and strategic support. I'm here to empower you to go further faster with an anti-hustle, no burnout path to getting richer and more financially fit for investing, acquisition, and growing everything you own. Let's grow.
So let's talk about asset accumulation, because I think this is the really important, not always talked about area of opportunity. And I will say it is one of those things that once you start realizing that you can really make money and now have the ability to spend money, we really want to think about why is ownership such an unlock? Because you could do so many things with money, right?
Yeah.
And so when I think about this idea of like having a CPA, I think the big area of opportunity for me was like there was time annually and then now biannually that we really sit down and talk about what do I want to achieve? So that's simple, right? But then the next steps of that is like, what are the things that would be getting in my way? And a big part of that was the tax code. It's like, once you get to a certain level of earnings, and actually I would argue at this point, anybody, that is a significant amount of money that we're just giving away.
Yeah.
And so one of the easiest ways to accumulate more wealth faster is, I'm going to call it asset ownership, but that's everything from owning businesses, investing into businesses.
Okay.
So when somebody comes into a significant amount of wealth, like a trust fund, and they start dispersing those payments, there is usually someone that tells you like, okay, you want to have this much liquid, right? Money that you can actually use. And then you want this much in like a 10-year scenario, a 5-year scenario, a 2-year scenario. And much of the tax code, you know, is incentivizing to people who take risks out that curve. So the more risk you take on, the more the tax code allows you to be protected by, you know, tax incentives, write-offs, that kind of stuff.
Okay.
But think about a significant portion of wealth. I mean, anything from 20 to 50% of everyone's wealth is taxed. And what if that was a totally different scenario where instead of thinking, I pay my taxes, the amount you pay in your taxes almost becomes your investment fund?
Interesting.
Yeah.
Say more.
Say more. Well, that's how we started. So, you know, once you start getting to the point where, you know, I'm in the 6-figure realm very early, 21, and then by 22, I was making $100,000 a year. So at 22, I had just bought the house a couple years prior, about a year and a half prior. And then it was like, oh my gosh, my first real like tax opportunity. Uncle Sam was gonna like slam down the hammer. And luckily my CPA said, thank God you bought that house. It's a strategic write-off.
I see.
So let's just, this is a simple example, and this is not perfect math. This is, what do they call it? Girl math, but come on. $100,000 comes in. Let's say that's taxed at 25%. So $25,000 essentially needs to either be written off or handed to Uncle Sam. Which would you choose?
Oh, I'm writing it off.
for sure.
Every time.
So that's your investment fund.
Yeah.
So when you're thinking about that proactively for the year, you're like, well, $25,000, let me tell you, at an average check size of $5, $10, $15, $20, $25,000, you can invest in 5 different businesses and have some ownership in 5 different businesses. $25,000 can buy you a cash flowing asset that probably makes you $1,000 to $2,000 a month. I love the look on your face right now. I can't. It's awesome because it's so real. You're like, the fuck? You didn't tell me this soda? Really?
Yeah.
So that's when I started thinking, now I call it a fund. But before I was just thinking, what else can I do with that money? I'm not trying to give this to the government.
Fair. Very
How
fair.
can I legally, ethically get this money out of my hands, but in a place where it starts flowing back in? Hence the word cash flow. So that's when I started buying businesses. And I started seeing the opportunity, whether it was a tiny digital asset or maybe it was a company that was local and I was already planting roots locally, to take that over and then leverage some of my other strengths and success points so I could essentially force appreciation, which means make that asset even more successful. That is a huge area of opportunity that I think everyone has the opportunity to do. Imagine if you could, so bartending is a skill of yours that I think you're exceptionally good at.
Thank you.
And
yes.
for a lot of people, they get stuck right at the bartender level.
Yeah.
But what if you could like literally turn that into a business for you?
Yeah.
Lots of people do.
Lots of people do that.
Lots of hospitality groups started with one location, 2 dudes in a dream, 2 gals with an idea, and then it builds out from there. And then a lot of the really smart groups, they start to think about scale. So it's not just one location. It's like, where do our economies of scale come in? Notice this is all related to business, but could also be applied personally. So when you're starting to think about, well, how do I get economies of scale? There are many different ways to do that if you can leverage your strengths. If your strength is saving money, you can do microloans. You can save money and have enough put aside for you to give like really tiny, highly risky loans out to people who have maybe a short-term need, but they also have something that you can keep as collateral so that you get it back. Those are really risky bets, but those are bets that you can start with $500, with $1,000.
Yeah.
And so as you start taking more kind of investment risks, because let's be clear, they're risks, you start to see that the world really incentivizes risk.
Well, yeah. And I think I want to backpedal a little bit because I think I'm hearing what you're saying in a way that I don't think a general audience would hear it. So I think like when you're saying like, oh, like when you have the X amount of wealth and then you're able to invest it in these assets so that you can use that as write-offs, you're not just sending your wealth to the government. That does sound like a very similar to what people with vastly more wealth than you were talking about do unethically and sometimes illegally. But in this case, it's like, well, if you can put that asset into something that feeds you or feeds your community, that's a win-win.
I'm sorry, I'm going to go all the way in on that. Yeah. Most of the time, I'll be honest, people who are at that level, they're doing it legally. We don't like that that's true.
I don't like that.
Yeah, I don't love that that's the tax code, but that is the code. Sure. And so that's the first thing I think about is like, these guys play at a level where like they're making sure they're compliant.
Yeah.
But what I absolutely got to, and I'm so glad you get it, was like I could either invest in myself, invest in my community, invest in my skills, invest in others, and really help rise the entire world. It sounds really hyperbolic for a second. Or I could strike a check to a dying institution that's literally going to take it and flush it down the toilet. The choice is mine. So that idea of an investment fund is what everyone else is doing when they have a lot more in the bank. I just believe that I would have never gotten to where I am if I waited for a certain number to get there.
Fair.
I kind of accidentally started seeing these as opportunities to invest, and I really wasn't thinking about getting a return. I was thinking about, how do I leverage my skills? How do I learn more faster? And how do I put myself in a place where I'm at the bargaining table and I'm not the help?
Sure, yeah.
And that is really what I came from. It's like, unless you're born into wealth, in some way or another, you're supporting others. And part of that is fantastic. And part of that is limiting if you let it be. So when I think about being my own asset manager, I never thought of it that way. Somebody gave me that phrase a couple years ago, and I thought, oh my God, I sound amazing. I am so smart. But really what I realized was I'd been managing assets for a really long time. They just weren't mine.
Yeah.
Right? Like we treat so preciously other people's assets, right? As a marketer, we're thinking about the intellectual property of a business, the logo, and how do we leverage it with ads and people and social. And it's no different than treating our money, our needs, our things like an asset and managing that.
Agreed.
Yeah, it's really interesting to think about. I think some of the ways we can think about doing this very well is to get to a number, which is kind of really difficult to do, but to get to a number that you're comfortable spending in this way. I'm going to call it spending because in some ways these risky bets, they're to be expected that they may not pan out.
Yeah.
And
you are giving money somewhere.
100%. So I always think about something like 1 to 3% of your emergency fund, but without taking the emergency fund. Does that make sense? So if your emergency fund is, I don't know, 1% of 1,000, do you? I'm not that smart. I think it's
100?
Like, okay, cool. We'll go with that. If it's wrong, you're going to get roasted.
Wonderful.
But if I can take that same amount and then put that aside almost like as my speculative fund.
I see what you mean.
Yeah, because I need to know I can lose that.
Yeah.
Yeah. And
so you're
still
not
have my little
pulling
nest egg.
from your nest egg.
Absolutely not.
You're just like, okay, I have this nest egg. What can I, now you're building a different nest egg, but it's not a nest egg. It's like, I'm going to do something with this later on.
Yeah. And so maybe that's the starting off point so that like, most people can say, which is why they go buy the, insert expensive materialistic thing. They're like, oh, this $100 won't kill me if I flush it down the toilet. Or this, $500 thing that I, going to this concert.
But if it won't kill you, you could just put it aside.
If it won't kill you, then let it make you stronger.
Yeah.
That to me is an area of opportunity that I feel like I accidentally on purpose did. And having someone kind of navigate that with me strategically and intentionally, and then being able to be proactive is just, it's been next level for me. So thinking about that wealth acquisition fund a little bit differently than we do now. It's almost never things.
Yeah.
It's truly finding opportunities, experiences, businesses, and I think growth assets.
So how do you find businesses, or how did you?
So I honestly was boots on the ground, and there's not an easy way to do this now. I really love the idea of being an expert on your own. So think about, what are you an expert of? You're probably an expert of some of the things you wear, some of the things you consume.
True.
And so I am a firm believer to this day of cold outreach. So I just, hey man, that's an interesting website. I'm gonna send an email inside of the privacy policy because I know they have to have that one be current.
Yeah.
And I'm just gonna ask them some questions about what they're doing with this business or this website that I could maybe be helpful with. Me as a marketer, that's one area of opportunity that I've really leveraged, that have kind of gone to some really big opportunities. There are marketplaces for this. I find you have to, again, work on the skill sets that make you equitable for those marketplaces to find the good deals. So being more analytical, figuring out kind of how to understand, I call them KPIs, key performance indicators. That's the business person in me. But knowing what really matters really comes down to basic accounting, finding an opportunity, and knowing that you can do something with that opportunity. So as an example, my first 2 businesses, I used $300,000 of my own money cash, and I bought 2 fitness studios. I was a patron of the business, and for me, I saw the recurring revenue as stability, which was kind of my love language money-wise. And I had this idea that if I could bring a more fitness-oriented, actionable, life coaching type vibe to that environment, I could not only grow within that asset, but I would also love, the people that I interacted with. And I think what I did for that local community, it's where I grew up.
Yeah.
That's absolutely what happened. So the marketplace is where I found that deal. Interestingly, though, I was already a patron. So as I saw the listing, I thought, this sounds really familiar. I'll reach out. I did not have a broker. Most people think they need someone to give them permission or support or strategy. And I was like, no, I'll knock on the door. It's cool. And I navigated that entire thing with no support other than, when I closed that deal, I think I was immediately like, what did I just do? And I wish I could remember the numbers in my bank account at the time. It was not all of the money I had by any means.
Yeah.
And I did something unique where I collateralized my own loan, which means I took my money to a bank, a private bank, and I said, hey, this is my money, but you can help me create a loan. This is the value of great support around you. So my financial advisor, I had met someone else who worked at a local bank and connected them, and they decided that I absolutely could do that. So I gave myself a 10-year horizon to basically earn all the money back, which looking back was actually very long.
Yeah.
But also needed because the business landscape is brutal. And
Fair.
I took that money and it goes into a CD, a certificate of deposit, which means it's my money, but the CD holds it. And then we turned that into a loan, so I only had to pay back that amount.
Oh, it's like opening a secured card.
It's like, yes, actually, it's a great,
Got it.
what a great connection there, 100%. So I was not going to the SBA or to a bank for a loan. I didn't want debt and I didn't want terms.
Yeah.
And I knew I had the money. I could have forked over the check. But it was a way of me kind of de-risking that opportunity that made me feel very comfortable. Interestingly, after year 2, I paid it all off and just kept going into the horizon. But that gave me a whole other level of unlock. And actually, it may surprise, it wasn't actually financial, it was strategic. It was like now I had done something that most people will never do in their lives. And so as I was going out there learning how to grow that business, success begets more success. I realized that being a business person put me in rooms where other business people were like, well, I don't have those skills.
Yeah.
Can you come do this for me? And can you help me grow this business? And so I very quickly took a career that was kind of just focused on sales and marketing and became a specialist in sales and marketing as a growth vehicle for some really high on the rise niches. So fitness, beauty, health, and wellness at that time was, they were in their growth era, so to speak. So that was an interesting first acquisition, certainly a very large dollar amount. And for me to have the cushion to do that was, I think, something I never thought of as privilege. But it also made me think, well, how much more can I do?
I think what's also interesting about that story is that the thing that ended up being the biggest asset was the fact that you acquired the asset in the first place, not the asset itself.
Oh my God, say that 3 times.
It ended up being of course, having the businesses helped with financial things and cash flow. And, I'm sure it was a great write-off.
For
Your
sure.
CPA loved it.
Absolutely.
But it seems like the thing that you were able to grow on was actually the skill of just putting yourself out there.
Yes. Thank you for seeing that so clearly.
Yeah.
I talk about this now a lot because sometimes I'll come in as an investor and I will invest, capital, money, but I will also invest skill.
Yeah.
And you may be surprised, most people would prefer both the capital and the skill, but mostly the skill. It's easy to get money.
Yeah.
It's not easy to know what to do with that money to actually make you more money.
True.
Turns out that was the whole thing that I had been doing for everyone else that I started doing for myself that really accelerated my wealth in a way that I could have never fathomed.
Yeah. Because I think when you have something that maybe other people have or find attainable and you do something with it that they don't expect, I think that is the thing that you can really capitalize on. And that's not a thing you can buy.
Yeah, it's interesting you say that because I think everyone thinks that if I just get this coach or this guru in the room or this mastermind, it's going to do the thing. And actually, I believe that you do the thing.
Yeah.
You put yourself
maybe
in
having
that
coach will give you the seed of knowledge that you need in order to do the thing you're going to do that's going to be, that's going to lead to greater success for you. But if you are just following what someone else is doing beat for beat, you're not going to get your success. You're going to get their success.
Right. And sometimes that's enough. If you want to live simply, I think that may be enough. For me, I realized that I wanted a level of comfort that was extravagant.
Yeah.
So additional things I did. Pardon?
Period.
Yeah. Hence me. But I think that really started showing me that the world was my oyster.
Yeah.
It's I can do whatever I want as long as I'm willing to take some risks, be smart with what I do, and grow my skill set. And so to this day, 20-something years later, sizably larger money, net worth, cash in the bank now, I still do the same things. I still live drastically underneath my means. I still aggressively think about what's my next step. I'm still proactive, but I'm also always thinking about how can I do more with less? So instead of thinking about, what's the furthest I can go? What's the most I can buy? I'm always thinking, what's the least I can spend? What's the least I can do and be happy? It's like minimalism is finally in vogue.
Yeah.
And you know this, for so long, that really was my growth hack. It was just being so drastically obsessed with living underneath my means, obsessed with not always showing and being notorious about my wealth has been, I think, an area of opportunity for a lot of us in a world and in an age where it's all about, I'm going to say this crazy phrase I heard, and I really believe it is killing and sucking the lives out of people, pornographic wealth. It is like, let me put it out there. I want to show you every single thing I have, everything I can get, everything I can do. And if we're really thinking about what that means, well, it's the same thing as the other type of pornography. It's not good for everyone involved.
And I think maybe a shift in that is like, kind of the opposite of maybe tell, don't show, which is like maybe tell people how you got to the place that you are in, but you don't have to be you don't have to be dripping in diamonds in order to prove that you're wealthy. And I also think that like a lot of times people get into this mindset of that, like if they're not spending aggressively, that they're thinking with scarcity.
Yeah.
But I think keeping more of your wealth for yourself in order to grow later on and be able to then share that or invest that or uplift someone else with it, that's just a different way of investing in yourself that's not as obvious as maybe like buying a nice piece of jewelry.
Yes. I'm really tired of the, I'm going to buy this luxury bag as an investment in me bullshit. Yeah. That's not true.
It's maybe an investment in like your happiness in that moment, and that's okay. But like, is that going to be something that is sustainable for you later on? Like, are you bankrupting yourself in order to get that small burst of endorphins?
Yeah. Someone once said this to me, and I wish I could credit them because I don't remember who it was. They said, if you keep kind of forcing yourself to do more, you won't be able to do less.
Yeah.
And so as that relates to, material things, I think there's something really understated about living underneath your means. This buy and hold strategy that you're talking about, which is like being able to buy something, not for the exit. Everybody's talking about the exit and the returns, but what about that slow, insidious growth? I think that is just so overlooked today. And no one ever asked me this, but the way that I made the money and the way I grew the money are almost entirely inverse. So if like 50% of what I earned was from my skills, consulting, coaching, owning, well, 50% of my wealth came from buying assets and investing and I think doing the opposite of spending.
Yeah.
But no one ever thinks about that.
Yeah, because I think people, they think about that, but only as like a byproduct of having the wealth that you have to not spend in order to get. So like they know once you have the wealth, you can spend it. But I think the not spending is the thing that gets in people's way because it feels safer to just have it and hoard it and never do anything with it than it does to take some sort of risk with it, even if that risk is high reward.
Yeah.
Because that can be scary if you don't think you deserve that reward, or if you've never seen anyone get that reward, or if there's no one around you who has made that risk before, even if you know it's solid, you've never seen it happen in real time. So like, how do you know? Which I think is something that I've been very fortunate is to see you take those sorts of risks and to see other people take those sorts of risks around me and be in a family that is pretty open about talking about money. It doesn't make me scared to make those risks. It just makes me think about if I'm in the right place to make that risk or not.
Yeah, that's so healthy. I think there's a word that's coming to mind right now. It's patience. In the venture capital realm, they talk about patient capital being capital that won't just push you for growth at all costs or to the moon type exits.
For sure.
And I think having that patience as a superpower as you're thinking about this journey, it is a fragmented journey. There's ups, there's downs, there's personal things that come in. I think I would have been much more aggressive much sooner if my personal life wasn't such a hot mess before I met Matt. And so there's so many things that I'm like, man, I was an early adopter to a number of really big tech companies, Spotify, Canva, like things that right now you see all the upside.
Yeah.
But back then I wasn't able to think about the long term that way. I didn't have stability. I didn't have a thought partner or life partner to think it through with. And everybody that I was surrounded with were just on a different trajectory. They had family money, or they weren't thinking about that stuff, or they weren't able to get there yet. And so I think this is such an important conversation to have that I wish I could have had earlier with you and with others, because there was something about what I was doing. I never really believed I was onto something. I was just doing the next thing that I thought I needed to do, and was like total blinders. Like, let me just do this thing. No one needs to know about it. I was very private about it. And I think if I could go back, the thing I would do differently is I would do it more openly and bring more people along for the ride, even if I thought I was wrong.
Yeah.
And believe in myself a little bit more and take riskier bets at a time when I was younger and kind of able to be patient with myself because I had the resilience.
Yeah.
What is your affirmation for yourself that got you to thinking about this differently? Like, was there a thing? Was there a word? Was there a...
Thinking about what?
Thinking about just having money. You know how many people are turned off by the word wealth? And it makes me feel awkward to use that word. Actually, you were with me when I did TED.
Oh, I think about that all the time. Honestly, that's part of it.
Really?
Was the TED Talk that you gave. And that the moment...
go on. Tell me how good I am.
In the rehearsal where, like, I remember you had a line where you were like, oh, like, I did all these things and, like, now I'm worth millions.
Damn, you remember it too.
Yeah. And then you asked everyone in the room, you were like, did that sound vain? Like, did that sound like I was bragging? And everyone was like, no, bitch. Like, if you're worth millions and you want to say you're worth millions, like, and you got there and you're sharing that with the class, like, we love to hear that. And I think I remember hearing you ask that question and I was like, oh, I didn't think it sounded like that at all. But I also would never say that out loud.
Oh.
And so I think I started to think about wealth from that point on. Because remember we had some like budding conversations about wealth, mostly about like success, which is like they're cousins.
Yeah.
But about like, staying flexible and being open to opportunity. And I think I carried that into my journey with wealth with like the, very overused phrase of like, well, why not me? And I think, if I can see a bunch of people around me that I don't think got to where they got in the right way or deserved it or just handed to them, if they can have it, and I think that I would do better with what they have, then why shouldn't I have it?
I love that. And I'm going to blow your mind right now. I heard the feedback at TED entirely differently.
Really?
I heard someone say, and I'm like, I asked for feedback? I thought they just gave it. So insecurity 101, I asked for feedback apparently, and I heard that from you, and I thought, oof, from someone in the audience.
There was one person who said that, yeah. That is true.
If you go back, you can fact check me on this. The TED is obviously live on YouTube. I changed what I said.
I know. I was there.
Say I helped people make millions.
Yeah.
And that for me was like, I want to go back into hiding. I don't want to own this. And I don't necessarily feel like this is the greatest part about me. Side note, that may have been the most successful way to think at the time.
Yeah.
I was still growing.
I also think it's the most marketable way to say it.
Sure.
So like on a larger platform, that might be like a better way to say what you're doing. But I think that it's interesting that like you just owned it fully for yourself in the rehearsal. And most of the feedback there was people being like, no, girl, if you want to say that, say that. Like, if it's true, it's true. And there was one person who was like, I didn't really like that. And then I saw you change it.
Wow. Oh, that's so funny. That is, to me, what most people do with their life in general, and especially with money, is like you have all these great things and all these great things you see, and then there's this one issue or one area that you don't feel strong about, and you hyper-focus on that.
But
and it may change the plan.
Like with money in general, or money specifically, talking about having money is something that like, it can really only take that one voice to be like, no, I was kind of uncomfortable with that because it's such a societal norm that like we don't talk about money. We don't ask how much people make. We don't ask, what people's savings accounts look like. We don't ask what their credit score looks like. We don't ask, how many businesses do you own? What's your net worth? We don't ask that. And I think if we did and we were more open about that, then we wouldn't feel that like, ooh, when we hear people talk about their wealth.
That's an interesting point. And that's so true. In the corporate world, all you ever hear is do not compare your salary. Do not tell your earnings to another team member.
Which I'm out here telling everyone my earnings.
I mean,
especially as a manager, I'm like, if you want to know, I will tell you. I won't tell you other people's earnings. That's a little much. But I'll tell you mine.
That's so
I'll
cool.
tell you how much you made at the end of the night. I'll tell you how much everyone made at the end of the night.
That is such an interesting, awesome way to be. This is what I love about your generation. It's like a zero fucks given generation about certain things that we used to like keep close to the chest. Let me give you an alternate story. So I have a best friend. We started at the same time in the same career. I know you know who this is. And we only found out about 3 years ago that we made significantly different amounts when we first started at that
And that's
company.
what I'm saying. How are you going to know if no one's saying it?
Yeah. And she was so embarrassed for me because I was equally as qualified. But what does that opaqueness really do?
Yeah.
Puts the hands in the master.
I didn't know to ask for a raise until I talked to one of my friends who used to do the same job as me. And she told me how much she was making at a different place, but like same kind of caliber.
Yeah.
And I was like, oh, so I could ask for more money. Heard, thank you. And then I did, and then I got it.
Wow. This is that area, I'm going to call it a phrase, financial fitness, that I think I dreamed of talking about 20-something years ago. If you remember, my first iteration of my business was like equal parts fitness, but as it relates to financial, business, holistic, and health. And then it was also, marketing and sales.
Yeah.
And so obviously one won because one had more demand at the time. But this idea of financial fitness, to me, is what most people kind of overlook about what makes success.
Yeah.
It's not just about making money. It's not just about saving money. It's not just about asset accumulation. There is a whole like balancing act of knowledge and action that nobody talks about that I really want to go deeper on next. So, in summary, I think thinking about our own behaviors and our own strengths. And I also think where we're struggling is probably a really simple way to think about our next steps. So maybe as an actionable next step, I want to recommend a game called People, Places, and Things. And I just want you to take an inventory and an audit of, the patterns that you see of the people you surround yourself with, the places you've spent time in. That could be homes, neighborhoods, cities, states, however you see that, and the things that really define you. And as a behavioral scientist, I'm a pattern recognition expert. So what that means is, how we got to do it to get people to buy is you look at what is the average 20-something in this city, care about.
Sure.
And what I want you to do with this audit is to really realize the patterns in your life. The patterns
Auditing
with your
yourself.
Money. Audit yourself. Yeah. So when you do that, it's going to really open up some things for you. Sure, mindset, but also actionable points, people you may need to get out of your life, things you need to do in the short term. I did this on the relationship side, and it is actually what made me a very healthy person to go out and be with the love of my life and to be together for almost a decade now.
What does this look like, this audit? Like
Writing it all down.
Yes.
Researching the patterns. So once you write it all down, you're going to see the patterns right away.
Okay.
You're going to
you're writing down what? You're writing down like in the people, like all the people I spend the most time with.
Absolutely.
In a week's time or a month's time or whatever.
Yeah, the
day
people
to day.
that are most influential to you. So who has the most, first of all, it makes you think, who's influencing me right now?
True.
The places that you spent most of your time or where you choose to spend most of your time. So you may see an addiction that didn't look like an addiction. And just look like how you spent your time.
For sure.
And then the things aspect of it is really figuring out your value set. What I always notice with my people, places, things is I'm very heavily focused on people, very flexible on places.
Yeah.
And I care very little about things.
For sure.
And so what that allowed me to do was to know that I could have a different level of financial fitness than maybe somebody who has a different value set.
So this is like keeping a tally on like things that are influencing your life.
Absolutely.
So you can see where you're being pulled.
Yeah. If you can see it, you can change it.
Yeah. If you can see it and you don't like it, then you can do something about it.
Absolutely. You can see the patterns. So that's homework.
I like that.
I know.
It's very on par with something that I think I've said before of like, if I don't envy your life, I won't listen to your advice.
Ooh.
Like if there's nothing about you and the way that you navigate the world that I want to adopt into my own navigation, I don't value your opinion.
Oh, that's so good.
So I think if you're doing that list and you see like, oh, there's some people here that I'm seeing every day or every week or I'm asking advice from, but I actually don't want to live like them, maybe stop asking their advice then.
Yeah. I think I've been very aggressive about how I spend my time and who I surround myself with. And it has absolutely changed the game for me and has accelerated, forget money, it has accelerated the value of my life and the value of my lifestyle. And I think that is that area of financial fitness that no one talks about. Is like, I love this. It's a very unknown Maya Angelou quote. It's like success is liking what you do and liking what you did to get there.
I think I did know that one.
Yeah.
I think.
It's a good one.
It's a good one.
And it's really important that as we think about generational growth, that we're not just doing something we don't want to do. We're doing something because there's a greater purpose besides accumulating, stacking Benjamins, and having things, because that may not be for you.
That's also not like a long-term goal. Like you're going to get sick of that pretty quick. That you reach a wall with that pretty quickly. That doesn't feel good for a long period of time.
I mean, I always think so, but every time I turn on the news, I see another person who just imploded their lives, even though they had all those things.
Well, yeah, of course.
Because that really isn't
It's not sustainable.
It's not a sustainable goal, and it's not the goal that I think most people have deep down.
No.
But that's where
It may be
doing
the first goal.
It may be goal one. It may even be like, when I get to a certain level, this is the thing I care about.
Yeah.
But I think doing this, it takes the fight or flight of the brain and calms it down enough so you can really understand, what am I doing? What do I want to do? And what's in my way to get there?
Yeah.
So it'll get you unstuck, because really, unstuck yourself. Got these quips, honey.
Thanks for joining us. Now go out there and turn your success into action. Generational growth is about helping you in every area that matters: mind, body, business, and self-care. Share this episode on social media and LinkedIn, and feel free to send us where you feel strong and where you need support.
Please note, this content is for entertainment purposes only and should not be considered financial or professional advice. Always consult with a qualified professional before making any financial decisions. Some of the products and services mentioned may involve financial compensation or partnerships.